Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Tuesday, March 28, 2023. Before we walk through all the charts, I just want to encourage you to please click like and subscribe each and every time you watch the daily Apple report. It helps us out a great deal. And check out wickedstocks.com, where we offer a full assortment of daily and weekly analytical videos, including daily analysis in the SPY, the S&P 500 ETF, the Triple Q, the NASDAQ 100 ETF, two individual stock picks every week. On Monday, we put out one on General Motors. You may check that out. It's approaching a significant long-term area that offers an opportunity, I think. Also, weekly S&P 500, NASDAQ 100, and the TLT, that is the long bond ETF, all for a very reasonable monthly subscription price. And if you don't like it after 5 days or within 5 days, just shoot us an email and tell us so, and we'll refund your money in full, no questions asked. Anyway, let's jump to the charts. This is a weekly chart as usual. I like to start here because I like to work with the big picture and work our way down into the day itself. It is the longer term trends that dominate the market. I call it sort of the undercurrent of the river, if you will, the trending river. And then you've got the back eddies, so to speak, right? And those are the counter trend moves that can occur inside of all that. So we came off of the low to mid 120s in early January. At the time, I was mentioning how that 169.36 channel top shouldn't be discounted as a possible 2023 target. And within about a month, we actually had an indication for that within about 3 to 5 months following the settlement above 138.58 or this channel top in early February. And we are on our way there. We're well on our way there. The big question is whether we'll see that 171.99 objective over the next 2 to 3 weeks or perhaps over the next 2 to 3 months. And the answer for me on that would be a settlement right now above the 160.49 Fibonacci level. That also corresponds not as well as it did a few weeks ago, but still I'm going to call it a range that really begins at 158.76. You can see up here, 158.76 is a descending two-thirds speed line. 160.49 is the level to settle above today, for instance, for then indicating 171.99 over the next 2 to 3 weeks. Inversely, not just closing below 158.76, but really I need to see it below is this it? Yes, 157.81 level. So we have slipped below it. We closed below 158.76 today, but it is the low of the high that I like to use as the downward pivot point through the rest of the week. So yes, breaking 157.81 today, opening below 157.81 today should yield 155.49 intraday. And if we then close today below 157.81, that would obviously be below all this other stuff as well. And that would signal within 3 to 5 days the low 150s, or what's presently in the 151.38 to 152.66 region. This is a meaningful longer term speed line. It is a new speed line based in part on last week's high. But if you recall, we had another speed line just a few weeks ago when we held this low and this low, a similar speed line. Actually, at that time, it was a two-third speed line. This is a one-third. I don't know why I get into all that because I don't have time to explain it all. But bottom line, if we close today below 157.81 and you're long this market, anywhere from the 3 to 5 day to possibly 2 to 3 week time horizon, you may consider bailing on that and waiting then for an opportunity in the 151.38 to 152.66 area, which could absorb selling through April. And from there, we can turn back up again. And over time, within a week or two, presumably, then close above that 160.49 Fibonacci level. And that would set up for 171.99 over the following 2 to 3 weeks. So there's another way to possibly see this is that we buy the 151.38 to 152.66 region. It is over the 3 to 5 week time horizon, during which the market can rally all the way up to that 171.99 long-term resistance area, where we could actually top out through Q3 and possibly in the later year. Here's the 151.38 speed line. And so we're not going to see this today, but if we did close below 151.38, there's a case to be made for a 2 to 3 to 5 week sell-off into the 130s once again. Long-term support. By that point in time, I will not be saying that the 171.99 channel top remains a 3 to 5 month target, and we are 2 months into it. And this is all true right now. But if we close below 151.38, it puts a serious pause on all that because we'll spend probably most of the month of April falling into the 130s before rounding out a bottom that then moves into Q3, so forth and so on. I think you catch my drift. So I'm trying to think if there's anything else. Yeah, let's talk the upside here today. Let me find the right chart. We do have 160.31 that is just inside all of this. So it's just another redundant point. It's actually this level, 164.99. Now, I'm not expecting to see that today. That would be a significant rally. 162.14 is in reach, though, above 160.49. 162.14 is nothing more than last week's high. And yes, if we push through 162.14, 164.99 is in reach by the closing bell where we can place a daily high. And I will say that if we did close above 164.99, then that low 170s longer term resistance is likely to be realized by the end of next week, where we could top out into possibly through Q3. Once again, talking downside here today, if we break or open below 157.81, 155.49 is likely. And then, of course, closing below 157.81, as I say, the 3 to 5 day swing trade shifts negative. Then expecting below 150. So you're short the market. That might mean buying 152 out of the money puts that don't expire for at least a week or so. Inversely, right now, I'm going to call it kind of a stalemate holding pattern as the market continues digesting and battling out the testing of the upper 150s, low 160s. Are we inclined to head south? I'm of the not so fast category until or unless we actually close below that 157.81 level. And then it's just a 3 to 5 day sell off into the low 150s where we find our next significant test and downward pivot point into later April. This is our base of support through April. We can fall off the low 160s where we are right now into the low 150s, bottom out there through April, and have at it again as we push through, presumably once again 160. 160, oops, there we are. Sorry about all this. 160.49. Once we test 151.38, within a week or so, we can close above 160.49 once and for all, and then we're 2 to 3 weeks away from reaching 171.99. I hope all this made sense, and I hope I covered everything for you, whether you're a day trader, 3 to 5 day swing trader, or near-term investor. I'll be back tomorrow, of course, with Wednesday's Apple report. Please click like, subscribe, check out wickedstocks.com. If you don't like it, you'll get your money back. It's about as simple as that. I'll talk to you soon.